Federal student loans will start accruing interest again on September 1, and payments will be due starting in October. The long-standing federal student loan payment pause will expire once and for all this fall. Interest will begin accruing on September 1, and borrowers will need to start making payments in October. There's no chance of further payment pause extensions due to a provision in the debt ceiling deal passed by Congress on June 2. The interest-free payment pause, known as forbearance, began as an emergency pandemic measure in March 2020 under President Trump. 3 years and 9 extensions later, renewed student loan bills could come as a shock to some of the nearly 44 million borrowers with federal loans. And borrowers who left school in 2020 or later will need to gear up for their first-ever student loan payments. Meanwhile, the Supreme Court struck down student debt cancellation on June 30. Biden vowed to pursue a Plan B, but take time now to prepare for payments. The success of such a plan is far from guaranteed, and it could take a year or longer to roll out. In the wake of the ruling, Biden also announced a 12-month on-ramp transition period for borrowers unable to make monthly payments. If they miss payments, they won't fall into default, though interest will still accrue during this time. During this period, if you can pay your monthly bills, you should, Biden said in a press conference. But if you cannot, if you miss payments, this on-ramp temporarily removes the threat of default or having your credit harmed, which can hurt borrowers for years to come. Here's more detail on when student loan payments will resume, plus steps you can take today to get ready. When exactly will payments resume? The payment pause will expire this fall. That means interest will start accruing on your loans starting September 1, and you'll need to begin making payments again in October, according to the Education Department. The exact due date of your first post-forbearance bill could vary. Note that the expiration date is no longer tied to when the Supreme Court rules on Biden's student debt cancellation plan. Previously, forbearance was scheduled to end either 60 days after June 30 or 60 days after a Supreme Court decision, whichever was sooner. The payment pause had most recently been extended on November 22, 2022. What about Congress voting to roll back forbearance? On June 1, the United States Senate voted to join the House in approving a Republican-led resolution that would retroactively end the payment pause via the Congressional Review Act. President Biden has pledged he will veto the bill, which would kill his student debt relief plan and potentially force public servants to return forgiven student loan debt to the government. Sophie drops lawsuit to end forbearance early. On June 5, private student loan company Sophie dropped a lawsuit it filed against the Department of Education to end forbearance, in light of the debt ceiling bill which codified the payment pause end date. In its original lawsuit from March, Sophie claimed the latest forbearance extension was unlawful on multiple grounds and has cost the bank millions in profits due to borrowers not refinancing during the payment pause. It's not the only group that sued to end the payment pause. A free market think tank called the Mackinac Center for Public Policy, backed by the New Civil Liberties Alliance, filed a lawsuit in April, calling the pause an enormous expense to taxpayers in a Michigan U.S. District Court document. And on May 11, the group filed a preliminary injunction asking a Michigan judge to force an immediate payment restart. What does the payment pause do? During forbearance, first ordered by then-President Donald Trump in March 2020 as the COVID-19 pandemic took hold, federal student loan borrowers are allowed to skip payments. The interest rate on their loans has been set to 0%, and collections activities have been halted on defaulted loans. Borrowers in standard repayment plans will find their previous loan balances waiting for them when payments resume, minus any debt cancellation that survives court challenges. Those in income-driven repayment plans, which cancel remaining debt once a certain number of payments has been made, are somewhat better off. Each month that passes in this payment pause still counts toward their totals. Should you make payments during the extension? The decision to start repaying during forbearance depends on your remaining balance and ability to pay. If your cancellation amount under the stalled Biden plan would wipe out your student loans, don't make payments during forbearance. Instead, put your student loan bill money aside if you're able. This money should be kept in a separate account so it doesn't get mixed into your normal expenses and is available for you to make a lump sum payment if cancellation never comes to fruition. Borrowers enrolled in a forgiveness program like an income-driven repayment plan or public service loan forgiveness will see their payment count increase each month, whether or not a payment is made. These borrowers should not make payments. Borrowers who will still have a student loan balance if cancellation is applied should make payments during the pause if they can. Using the short remaining time to make payments will get you closer to the finish line sooner and more cheaply. Whether or not Biden's broad debt cancellation plan survives, you'll still have loans to pay back. All money you pay toward your loans until forbearance ends in September will go toward your loan principal. Even partial payments help. Start planning for repayment now. Regardless of how you handle the last few remaining months of forbearance, start preparing for repayment today. Practice making these payments now, says Kristen Alanius, Director of Education at Your Moneyline, a workplace financial wellness company. Take the equivalent of what you would pay toward your student loans and use these funds to increase your emergency fund or pay off some other liabilities. You'll be prepared in case student loan forgiveness remains struck down and improve your financial health in the interim. Here are some other steps to take before payments resume. Locate your student loan servicer. The company that manages your student loans may have changed since forbearance began. Find your servicer by logging into studentaid.gov. Contact your servicer. Log into your servicer's website or give them a call. Update your contact information. Ask how much you might owe when payments resume, how much your monthly bills could be, and what payment plans are available to you. If you had automatic payments before forbearance, set those up again. Services expect a customer service bottleneck when payments resume, says Scott Buchanan, Executive Director of the Student Loan Servicing Alliance, so get ahead of traffic now. Consider an income-driven repayment plan. Your servicer can help you sign up for an IDR plan. These plans lower your monthly bills to a set portion of your disposable income. Your payment could be as low as $0 per month. You can do the paperwork now so you're set in an IDR plan when forbearance ends, Buchanan says. There are other relief options out there. A revised IDR plan is expected to roll out later this year with even more generous terms. And if your loans were in default before forbearance began, enroll in the temporary Fresh Start program to get them back into good standing.